Now I'm going to explain you what are the disadvantage of the absorption costing with the example. So disadvantage of absorption costing is what? This is because of the fixed overhead is assigned to the total number of unit produced, right? So fixed overhead is also assigned to that number of unit produced, because we are going to calculate unit per fixed cost expenses per unit, fixed cost expenses or cost per unit. Okay, so what will happen? The statement is saying that lowering the cost means the cost will go down, means fixed cost will go down each time with each unit that we produce. It means if there is more production, the fixed cost per unit will go down. If there is a less production, fixed cost per unit will go up, which is not right. We know that the fixed cost is the rent of the building. Rent of the building is not going to up and down every month. That will remain fixed for the long period of time. But due to, like they say, the gap says, right, generally accounting septic principle, the principle says that at the time of displaying or reporting to the external parties, right, though you have to explain everything and you need to use the absorption costing approach. This is the big limitation. So I want to prove this limitation. So how it works? Let's say absorption cost. We are going to produce some chairs. Hmm? So selling price is a 10 and the production is a 10,000 units. Hmm? Then we sold 8,000 unit of chairs, like 8,000 chairs in that particular period in the month of February. Remaining the closing stock that we have 2,000 units. We know that monthly rent is 20,000. Absorption costing is variable cost per unit plus fixed cost per unit, right? So direct material, direct labor that we have 5 and fixed cost per unit is $2. So fixed cost per unit that we calculated 20,000, right? So 20,000 is the fixed cost here, divided by 10,000 is a 2. So 2 is automatically coming here. So 5 plus 2 is the 7 is the absorption cost. Cost of goods sold is 56,000 and inventory is the 14,000. That is already explained here. Now 70,000 is the total of these two. 70,000 is the total of these two. Now what we want to do? We say that we know that here the cost of goods sold is 56,000 and sale is 80,000. Right? So look like this. So this is just, I have taken one example for the income and expenditure approach, profit and loss account here. The sale is here 80,000. 80,000 is coming from here, like 8,000 into 10. So this is coming here. I have put this formula automatically, it is coming. If I change this one, it will be changed. Closing stock is the 14,000 already done. And here is the cost of goods sold. So cost of goods sold here is this one, and the closing stock is coming here. So cost of goods sold that we have calculated on the basis of, like this is saying like 7 and 8,000. So 8,000 into 7, 56,000. So it is coming here. This is the gross profit. According to the financial rule, like financial accounting, this should be the display. There should be the reporting like this. But what is happening? Let's say the production is changed, or the sale is increased or decreased, right? So now what will happen? If there is 11,000 units, I'm just suppressing 11,000 and enter. So what is happened? 11,000 unit that we have here, the closing stock value changed. Closing stock value change, right? And also you can see unit fixed cost unit change. Why this has changed? I'm just putting this one in a red color. Look at this. So why this has changed? 1.82, right? But it is fixed. We know that the rent of the building is fixed at 20,000, but now this is going to change. If in case there is a production less, for example, it's a 9,000 production, right? So then what happened? If the production has gone down, the fixed cost has increased. So this is one of the limitation, right? I'm just putting this back $10,000 unit, 10,000 units. So this hence that we have proved with the increase or decrease in the additional unit produced or not produced or less produced, definitely is going to affect the absorption cost per, which is not right. No, this is the main disadvantage. But for the financial accounting, they don't have any other approach to calculate the closing stock as well as the sales.